in a very typical bull market move, the earliest investors in are the smart money, the people in the industry, the sort of private equity groups. And eventually you go along the curve at the top, that's when the taxi drivers are talking about it and the retail investors are plowing in, and that's usually when everybody else is selling. And I'd say we're seeing signs that we're a lot more closer to the beginning of this cycle. Yep. By having these big private equity groups from everywhere from the Middle East to the UK to Asia coming out. A lot of names we haven't seen in some time. Obviously, guys like Eric Sprott that have a lot of money behind their name have been already active for a good half a year plus. But, you know, this is pretty early stages.
Hello there, my friends. Chris Marcus here with you for Arcata Economics. And as the Federal Reserve continues printing unlimited amounts of money while the stimulus package from Donald Trump and the White House grows, I think there's a lot of people out there wondering, geez, what the heck is going on? What do we do? How do we respond? And with that said, I'm fortunate to have Daryl Rader of Minorum Gold joining me on the show to talk a little bit about the markets. He's also going to be kind enough, hopefully, to dig into his projects a little bit, which he's been working on, digging up some gold and silver. So with that said, Daryl, pleasure to have you on here, my friend. How's everything going with you today?
Yeah, thanks for having me, Chris. It's a very different world from the last time we met in early March at PDAC, that's for sure.
I was just going to say that. I guess it's just about a month now. And wow, what a wild 4 weeks. Hopefully everyone, you and your family and everyone with the company is doing all right so far?
Yeah, you know, it's, I'll be honest, as an allergy sufferer, it's not a great thing to be in because everybody looks at you every time you sneeze or whatever you do. And but otherwise, can't complain. It's going well. And as we discussed just earlier a little briefly, you know, it's given me a fair bit of time to catch up on some housekeeping as far as Minorum goes. And but yeah, you know, it's definitely a 4 week period I could have lived without, but I think these sort of market movements create opportunities. And you know, I'm a lot happier now than I was 2 weeks ago, where, you know, now I think we're starting to see some clarity in the markets with what's happening with the Federal Reserve, as you said, and here in Canada with our government and some of the stimulus programs being put into place.
Are you guys doing unlimited QE up there too? I know sometimes the Canadians follow us Americans a little bit too much for their own good. What's the Canadian bank response been like?
So we're in a unique situation where you know, the benchmark rate is falling, but at the same time we're starting to see mortgage rates increasing, and the central bank in Canada has acted a bit of a different way than the US. You know, we're not mailing checks out, for instance, to everybody. It's a bit more targeted, but it's more of an ad hoc program. I don't know what the ultimate plan is. It's not very clear to the market, like where I live in British Columbia and where Minorum's based here in Vancouver. The issue we have is our provincial government, or, you know, our state government basically here in Canada, our provincial government, has mandated that companies are not allowed to fire employees for reasons of the COVID virus. But at the same time, for a number of weeks, there was no stimulus coming to these small businesses. So you had all these thousands of small businesses having to pay employees, shutter their doors without having a choice, and then, you know, not having any revenue come in, a recipe for disaster. So the federal government is starting to give money to small businesses, but it seems to be very much an ad hoc approach in reaction to certain negative criticisms they're getting. There's no big, you know, man the printing presses like we're seeing in the US thus far. But to be honest, as we know, governments, they typically react to opinion polls, so that may change pretty quickly here in Canada.
Yeah, I have no doubt, and certainly it will be interesting to react, to watch how they react. Also curious about, in this past month, I mean, it seems like years ago now, but maybe you could touch on PDAC, what you noticed from the sentiment among the investors. Obviously, that's changed a little bit, but you could walk us through what you've experienced the last month and how people are looking at the projects, some of the adjustments you've had to make given the market.
So let's say beginning of March when PDAC occurred, which I believe ended on the 3rd or 4th of March, if I'm not mistaken, the sentiment in the market had not been really affected by this whole virus scare. So what we saw at PDAC, especially for companies like Minorm, companies that have a bit of a bigger profile on the exploration side of the business, we saw a large number of worldwide private equity firms come to Toronto. And we had a lot of meetings with these groups. And it really, I've been in the industry since 2002, and it really reminds me of the old adage that in a very typical bull market move, the earliest investors in are the smart money, the people in the industry, the sort of private equity groups. And eventually, if you go along the curve at the top, that's when the taxi drivers are talking about it and the retail investors are plowing in, and that's usually when everybody else is selling. And I'd say we're seeing signs that we're a lot more closer to the beginning of this cycle. Yep. By having these big private equity groups from everywhere from the Middle East to the UK to Asia coming out. A lot of names we haven't seen in some time. Obviously, guys like Eric Sprott that have a lot of money behind their name have been already active for a good half a year plus. But this is pretty early stages for those of you that were around in 2002 in the sector, coming out of the big bear market. Then things didn't just pop right away. It took a little while to get traction, but it started off that there was money available for the first time in a long time. The money was available to a select number of companies. It started becoming more readily available and sort of saturating the market, but you didn't see really big moves in the stocks just yet at the beginning. But they had access to capital. They started drilling, and then we started seeing a bit of a groundswell of investor interest come in. So I compared a lot to sort of 2002, 2003 from what we saw at PDAC. Obviously, with the way things very quickly degenerated in the market, already starting the second week of March, following up on the meetings we had with Minorm, really what we were in a situation was more than anything a holding pattern. A lot of the private equity groups, especially those out of New York, were suddenly all based at home now, trying to do, like we're doing Zoom conference calls with one another. And I think we're starting to see now a thaw in that holding pattern. You see groups starting to come to the picture or the table now with different lifelines that they're offering mining companies. So the private equity guys, especially them, are getting back together and making offers to come back into the industry. The brokerages are still relatively quiet. I spent a fair bit of February and even during PDAC, having a number of investment banks taking us around on non-deal marketing. That has still really not taken off because that is so much a person-on-person business. It's not really conference calls don't work well in those kind of scenarios. So it may take a while longer before we see the conventional mutual funds really start to gain traction and come back into the sector.
Well, which makes a lot of sense. I mean, you could make the argument that we haven't had a month like that in the history of most of our lives with just so much change. Obviously, the financial markets getting pounded, and also just a difference in the way that people are living. Although I am pulling up our gold chart here, if you can see that. And it's interesting because even throughout everything that happened in the past month, obviously the stock markets got sold off quite a bit. Gold almost got up to 1690. We see there was quite a spike there last night, with the point being that, maybe a little bit of a different case in silver, which is, been taking a little bit more of a pounding in the last month, although back up to $15 today. And gold really has hung in there. Maybe you would think with unlimited quantitative easing, you'd actually see a rally, yet still hanging in at 1650. So I would imagine once things settle down, people catch their breath. Because before this whole coronavirus, remember, we had a lot of excitement about gold, central banks buying it around the globe, and with good reason. So it would make sense that there would still, once things settle down, be some interest in the gold space, you'd think.
Yeah, I think we're pretty well all on the same page as far as, what caused the initial sell-off, especially in the mining stocks, i.e. margin calls and things like that for a lot of the market players that just had to sell anything that was liquid at the time. Talking a couple of weeks ago here. For my personal view, I was kind of cheering the downward swing on. You know, in the mining sector, we had such a bear market between 2012 and 2016, 17, and we always called it a bit of a death of a thousand cuts. And I vastly prefer sort of like an 2008 occurrence where it was just fast and furious. That's what we had here the last few weeks. And you know, I remember back in 08, I was actually speaking at a silver panel at the Silver Summit in London in November of 2008. And I was up there giving a presentation for a silver company that I was a part of a group that basically started Impact Silver down in Mexico. And I was up there with, you know, the Mags, the First Majestics, the Great Panthers, Endeavors, the whole who's who of silver guys. And I'll never forget doing this presentation. They were basically, there was question and answer period, and these people would be standing up saying, oh, by the way, did you know your stock just fell 20% today? And we're sort of, you know, okay, well, not much we can do about that. And at the time, I was a VP of a drilling contractor who had, during that period, our stock had actually fallen below our previous quarter's EPS numbers. So, you know, you were just seeing these crazy valuations come out of the woodwork. And the toughest thing was getting over the psychological impact of it, because everything in your brain was saying this is a buying time, and everything else was, well, I don't want to lose everything. I need to, you know, shepherd the bit of cash that I have. And, you know, that was a similar mindset I was going through looking at the markets here, experiencing the last month. You know, we know that based on all the macro situation, the stimulus, that it's time that we start looking at these as investments again. But it's tough when all you see 24 hours per day on the news is fear mongering and everything else. It's, you know, it's an interesting time.
Yeah, and perhaps that's what separates successful investors from ones who receive less success, where, you know, I guess on the positive side, gold and silver are cheaper than they were a month ago. Yep. Certainly a lot of the mining shares have really sold off quite a bit. And Daryl, obviously, maybe not obviously, but a lot of the folks watching, you know, are on board. They understand, all right, banks sell stuff in paper, yada, yada. But we see the unending money printing, stimulus bills that are growing in size by the day. So I think that's why people are looking to gold and silver. A lot of the people who watch the show look to get leverage on some of the miners. And for folks who don't know, I came in touch with you, Daryl, because our friend Dave Kranzler, who is a mining stock expert, highly recommended. Another person, it's in his pay section, so I'll leave him nameless. But you guys come highly recommended with the project. So perhaps for people who are into the mining stocks, looking to capture that rally and find some good projects to get involved with, you could share a little about what you guys are doing.
Yeah, so for those of you that don't know Minorum Gold, Minorum was formed back in 2008, originally as Mag Gold. So we were formed by the same group of characters behind Mag Silver, most notably Dr. Peter McGaw, that made the major discoveries for Mag, which, as your listeners probably know, is one of the bigger high-flying silver stocks out there. And the idea was to follow their business model in the gold space. And that business model is basically looking for tier one assets. And tier one assets in the silver and gold space are basically high-grade assets that will make money no matter the market. When I came into the business in 2002, one of the neat things back then was a large number of miners made money at $5 silver, at $280 gold. Miners were making money, and that seems like a distant memory today when you see a lot of miners with costs of over $1,000 an ounce gold. You know, a lot of the junior Mexican silver producers are close to $20 an ounce. They're losing money at today's prices. And the thing is, these tier one assets, it's what the majors look for, but at the same time, it's something you cannot buy sort of a mothball tier one asset. You have to find them. And that means doing the dirty work, doing the early stage exploration work, the high risk, high reward work, but understanding that when you explore for projects like this, you have to drill to kill them really quickly, because the odds are it's going to take a while to find one. And so for Minorum, funny enough, we built this big portfolio of district scale, primarily early on gold copper projects in Mexico. We still have a number of them. We were very aggressive. We probably drilled 7 projects, made 2 discoveries, dropped the other 5 projects, and then replenished the pipeline again. And through this replenishment of the pipeline back in 2015, we came across the Alamos Silver Project. And this project has ultimately become our flagship. So our name is Minorum Gold, but our flagship is a silver project. And if you look at our team that's in the company, guys like Dr. Peter McGaw of Mag Silver fame. He also discovered the Potosa for Exelon Silver. My background with Impact Silver is part of the management team there. We also have a bit of more of a gold contingent, guys such as David Jones, who discovered a lot of the deposits in the Guerrero Gold Belt in Mexico. The thing is, we have the team that's done it before, but this is the first time we've all come together into a single company. And it's exciting that we're on to what we believe is a pretty significant discovery of a tier 1 asset at our Alamos Silver Project. And if you take a look at our website, and as we'll discuss a bit onward here, all indications are that we're into a pretty significant district scale, high grade, wide vein silver project in northern Mexico.
Yeah. And so for folks listening at home, just to make sure it's clear, you're not out hoping to find something one day. You've already identified some assets. I think it's interesting you mentioned your goal is to be profitable regardless of the bullion price, but something I know a lot of folks are interested in, and maybe you could talk briefly on, is how things look. Should we get $2,000 gold or $20 or $30 silver? If you could talk about the leverage you guys get on a bullion price move as well.
Well, it's almost sort of an existential discussion when you look at silver and what reacts to the underlying silver price. There's obviously, you have tier 1 assets in the silver sector, which are pretty rare. They're basically the foundational assets that built Pan American, that built Hecla and Kerr, a few of them a bit longer ago than more recent. Built companies like Mag Silver, Silvercrest Metals today. You know, these are tier 1 assets. They're getting tier 1 valuations. Then you have the optionality plays, the companies like the Discovery Metals of the world in the silver space, guys that have really low grade silver deposits, but a lot of ounces in the ground. In rising markets, as you said, a $20 to $30 environment, you know, everything flies in the silver space. We saw that in 2016 as we approached it. Everything that had silver in its name flew. But the tier 1 assets, companies that have those, you look at Mag and Silvercrest, for instance, you know, they're at $1 billion market cap or above. They're not in production. There's a tremendous market for those irrespective of the underlying price of silver, but of course, even more so at $20 and $30. When you look at the majors out there, the Pan Americans, these bigger silver players, groups like that want tier 1 assets no matter the phase of the cycle. And a lot of them learned their lessons about buying optionality plays in 2010, when, yes, the silver price was rising, and yeah, this low-grade deposit had a lot of ounces of silver, but once they went through these multi-100-million-ounce construction costs, the price of silver dropped, and suddenly they were underwater, and they had to shut down a number of these larger mines. So yes, in a rising silver price, everything flies, but a tier 1 asset is really what maintains its value, you know, and in a good silver market, they just get a bigger premium onto their stock.
Yeah, that makes sense. Another quick one for you that I know folks always like hearing about. If you could just comment on the share structure.
So the share structure for Minorum is a little different. We have a very tight share structure, but we diluted our share structure back in the downturn to take advantage of a number of opportunities that were coming into the market, most notably the silver project that we acquired. So we have approximately just over 300 million shares out. Of that, about 70% of our shares are held by family offices, private equity groups, funds, high net worth investors out of Europe. The reason for that was a concentrated move on our behalf to move our shareholder base to Europe during the downturn. Primarily, well, basically because of 2 reasons. Number one, we saw a number of European investors looking to diversify out of the euro, and a lot of these European investors had not been invested into the mining sector in 2010 and 11, these generalist funds. So they were starting to look back in 2015, 2016 at diversifying into gold and silver. We had a number of contacts over there. And secondly, European investors tend to have a longer investment sort of horizon than the more momentum traders we see in North America. And that longer term investment horizon fits more with a classic exploration stage company. And thankfully, we found these backers. They came into the stock. They've been supportive from our early penny days right up to the last financing we did 2 years ago at 45 cents, where we raised 7 million, which the majority went to our European backers. So we have over 300 million out, but we trade like we have a lot less outstanding.
Well, and you trade like you have a company that has a lot of good growing interest already. And again, it's really been nice to learn more about your projects. I know Kranzler mentions you quite often in his journal, and we have a lot of folks watching today who are very familiar with Denver Dave. So Daryl, you guys are doing good stuff. I appreciate you joining me here today. Perhaps just wrapping up, can let folks know the best ways to get more information, get in touch with you.
Best way is go to our website, minorum.com, MINAURUM.com. We have a YouTube channel where Sonny Panu, one of our guys, does some great interviews with guys like Brent Cook and some of the bigger names in the industry, but also gives our shareholders a pretty good update of what we're doing. I would say visit the website. Send us emails if you have any questions. We'd be happy to keep you up to date on how things are transgressing right now in the current market. But basically where we are corporately is we're just going to be starting a phase 2 drill program as soon as this virus and its effects quiet down in Mexico. And that phase 2 is basically, we spent 2.5 years drilling our phase 1, which proved we're onto a massive silver district. Phase 2 now to commence once everything quiets down is basically to quantify what we have in Mexico and our flagship project. So stay tuned. And once that does start, that'll be a lot of rigs, a lot of meters, and a lot of news.
Yeah, I'm sure it'll be exciting. I'll be looking forward to following along. And folks at home, the contact information is in the description button below. So check that out. I think you'd enjoy learning more about Minorum. Daryl, thank you for joining me. You got some great knowledge about the industry, and you're doing a great job with Minorum, and we'll look forward to following your success.
Great. Thanks so much, Chris.